Hey everyone, so what I want to go through today is the Bitcoin 4-year cycle and show you why I think it's still in play and is at least something that you do not want to ignore when looking at the price of Bitcoin long term. Now, if you get some value from this video, which you absolutely will, and you learn something new, go ahead and drop me down a like down below, subscribe to the channel if you haven't, so you can keep up to date with my videos that I come out with each week. And without further ado, let's crack on with the video. In case you are new to crypto, the 4-year cycle essentially tells us that Bitcoin goes through these boom and bust phases in those 4-year periods, and that's what basically dictates the highs and the lows in the markets, and we get these massive run-ups, and then we come crashing back down, and then we go back again, massive run-up, come back down, but each time the price of the highs and the price of the lows is higher than the previous 4-year period. The 4-year cycle is linked to the Bitcoin halving event. And in case you've been living under a rock or you've been owning stashes of crypto and you're not sure exactly what that means, the Bitcoin halving event basically means that every 4 years, half the amount of Bitcoin is produced per block, which basically means that the supply of Bitcoin is reduced into the system. And these key halving events help create and time the bottoms and tops of the market and basically set the chain reaction off for the next parabolic leg in the next cycle. For those that think that the 4-year cycle is mumbo jumbo and it doesn't really mean anything and has no significance, I would say think again, because up until now, the 4-year cycle has really been playing out exactly on point. And if I just bring up these diagrams and show you the 4-year cycle halving events that we've had in the past. We've had one in 2012 July, one in June 2016, and the last one was in May 2020. Okay, and our next one will be March 2024. What we do know from previous history is that we tend to basically bottom out somewhere between 300 to 500 days, plus or minus 50 days, okay, in that range before the halving. So if we basically speculate that last halving, or the next halving, sorry, in March 2024 is going to be exactly here. So this is a data point that we do know, and we take that range of, say, 300 days to about 500, 550 days. Where does that put us? So that might put us at a potential bottom at about maybe early 2023, okay, or what I think is more likely, which is probably the more recent bottoming patterns that we've seen, is if we look at that 450, 550 day mark, that puts us at about Q3 of 2022. So what I would suggest that the 4-year cycle is telling us is that we might go lower to those targets that we spoke about of about $20,000 to $30,000, and we break these lows, and then we loiter around here, and then we basically get the next big surge to the upside, and that's what's going to kick off the next bull market. Now, what I want you to take from the 4-year cycle and some of the indicators that I'm going to show you that line up with the 4-year cycle as well is not exactly how price breaks down, or that something's really specific has to happen in those moments. What I want you to take from it is the principle of what happens to price and how it reacts at key moments. So what I'm trying to say here is if I just drop this down to the weekly chart, you can see that basically sometime before that bottoming phase in the market before the halving, okay, which is on average about 400-500 days or so, okay, we tend to basically see patterns like we are at the minute. We've got a bear flag. Back in 2018 we had a descending triangle, something similar over here in 2014 in that bear market, that we basically get these patterns telling us, okay, that we are basically looking for that next leg lower. And what you also notice, we always peak out at about that Q3 of every 4 years as well, and you can see that plays out as well to the T. So there's no reason at the moment to suggest that we are basically following anything different. Okay, we've hit these to the absolute T, and sometimes when I do look at Bitcoin, and I think it is like the greatest mathematical financial asset that has ever been created, because everyone gets caught up in the volatility and all of the news events that comes up throughout the year, but really it really does tend to follow these patterns of peaks every 4 years and bottoms every 4 years. And then we usually, after every one of these run-ups over here, after every parabolic run-up, we tend to loiter. And this is the space, okay, it's similar to where we are at the minute, big run-up, and then we tend to loiter at these prices. These are the spaces where we basically get new participants into the market, okay, and then they end up holding the coins, and then these are the people that eventually end up capitulating where we form the new low, and that is the real buying opportunity over here. And then we can get some periods of 2, 3, 4, 5 months of reaccumulation, and then we make our next leg higher. There is nothing to suggest at the minute that the 4-year cycle is not in play, and in my opinion, not only does this line up with so many other indicators, but it is the only model and the only bunch of data points that I think that we have that not only makes the most sense, but is actually still valid and has not failed us thus far. As we're halfway through the video, if you're getting value and you're learning something new, drop me a like down below. These videos take me a long time to go through, so if we can get to like 10, 15, 20 likes, that would be amazing for me, to help the YouTube algorithm. Without further ado, let's crack on with the rest of the 4-year cycle. So not only does the 4-year cycle help us navigate the tops and the bottoms pretty clearly, it also shows us that we basically get this period of run up and reaccumulation between the bottom, which is about 500 days before the halving, and everything leading up to, in and around the halving, okay, is basically accumulation for that massive run up and massive surge up to the top, okay. And what we can also see is that with this is in confluence with so many other indicators, right? And I just want to show you on the weekly, which we've spoken about before, the 200 moving average, okay? Where does that happen? We get this double tag of the 200 moving average in 2020. We get it again in 2015 in the bear market previously. And if the same were to occur again, like I said, we're speculating down here that maybe if we get that in sometime between June 2022 and the back end of Q3 this year, that maybe we tag the 200-week moving average over here, and that's basically what capitulates people and helps carve out our new bottom. What we can also see on the monthly time frame is that we get this really similar pattern of basically holding the 21 week moving average for a period of time, as we have done here 4 years prior, 4 years prior before that, and then essentially we show some sort of weakness at the weekly 21, okay. And like I said, it's not an exact like it has to come down, retest, or the candles need to look exactly the same. It's the principle of basically showing weakness at the 21, breaking down below the weekly the monthly 21 moving average, and then we move down to the next level below that, and that is always again the monthly 34 EMA, which is the next level below that, and lo and behold, that is nearly exactly the same as the weekly 200 moving average. So if price goes down over here, which is exactly the prices that we spoke about earlier, in my previous videos, at about 20 to 30,000, somewhere in that mid 20,000s, okay, then I think that puts us, pretty nicely at a market cycle bottom. So until the 4-year cycle fails us, I think that it is the clearest model that we need to follow in order to navigate the Bitcoin space. That doesn't mean that you should sell all of your crypto and you should just wait for 20,000, 25,000, because there are no guarantees in trading. These are just the best available guides with the best data points, in my opinion, to show us how we can be navigating the market. So I think that whilst crypto is the riskiest asset to hold, it is also the riskiest asset to not hold for the potential upside. So I think you should always hold some crypto, but like I said, hold some cash on the side and just make sure that you are positioned accordingly to take advantage of those, low price targets of the 4-year cycle should we reach there. So we've got our 4-year cycle with our data points and our price ranges for our tops and bottoms and where and when they might occur. We've got the key moving averages that always tend to get hit so far every 4-year cycle. And I also just wanted to, draw your attention over here to the RSI as well, because I think that can be pretty important. What always happens at the bottom, okay, on the monthly RSI is we tend to bottom out over here at about that 43 on the RSI monthly. Now we're currently at about 53, so we've got a little bit of a ways to go. So look for this to be in confluence as well with some sort of market cycle bottom in the 4-year cycle. Like I said, all these things are potentially lining up to give us a really nice bottoming pattern. You can also see that those monthly RSIs coincide with those weekly RSI bottoms of about 28 to 33. So I think any time, okay, that you get between these low ranges on the weekly RSI as well, that's also giving you a little bit more, confluence that you're going to be at the bottom. So if you're able to link even 3 or 4 of these indicators together, you're not looking to get the absolute bottom and making sure that everything is exactly perfect. But like I said, if we break these key levels, we're in this sort of time zone and we start to see those bottoms on key moving averages and RSIs that we've seen in the past, which is the closest thing we can use to predict that future performance, although it is not absolutely guaranteed. Okay, that's going to give you massive confluence, and until anything else changes or shows us any different, I don't think that we should be thinking that we're essentially going to go up to like $200,000 immediately before we go lower. And the last thing I wanted to draw your attention to as well was just volume, and you can see that basically the highest volume selling pressure always occurs, okay, relative to that period of time, okay, at the at those key bottoms. All right, so we get this massive spike in volume as well at those key bottoms. So if we see over here, you can see that we've got a period of quite low volatility at the moment. So if this was to potentially spike and we get heavy selling, volume pressure moving into 2022, in the later parts of 2022, and maybe we reach over here and we get some sort of massive move to the downside, then we can probably use that as confluence with some of the other indicators. So like I said, I want you to keep an eye on all of these things, okay, and put this into your arsenal that the 4-year cycle is likely going to be the closest thing to follow until proven otherwise. So I hope you got some value from that video and you understand exactly how the 4-year cycle works, and that gives you something else to think about if you wasn't thinking about this already. Do not be deterministic that these current prices or the 30K level can't be broken because everyone else online tells you otherwise. You need to have this sort of stuff in your arsenal, and think about it, no one else is also talking about this, okay? So that in itself, tells me that it's something that I want to be taking note of, and, all of this, 20-year, 15-year history of Bitcoin is telling you, it's giving you the clues, right, that we are likely going to retest these levels at some point. Bitcoin is always a magnet to these key zones as well, so don't be surprised if we get there. Like and subscribe to the channel if you haven't already, and I'll catch you in the next video.